Hello and welcome. My name is Robin Harding. I'm the Asia editor of the Financial Times, and it's my great pleasure to moderate this panel on currencies in flux. There's been a lot happening in currency markets this year in response to a few minor news developments, such as enormous US tariffs, several wars, and we've seen the dollar depreciating, and we've also seen various dislocations in markets, such as strength in gold, that suggest that investors are at least interested in finding safe havens outside the dollar financial system. And I think that raises some questions about the dollar, which I look forward to putting to the panel. Of course, we've often heard suggestions that the dollar's role might be under threat, and in the past they have come to absolutely nothing. So I'm also interested to ask the panel today whether they think anything is different this time. I'm not going to do full introductions because I think you have the biographies of our panelists and they speak for themselves. So let me plunge right in and ask what our panelists make of this recent round of questions about the dollar. And let's start at the far end with Diana and come this way. So please, Diana, what do you think?
Well, look, actually, I would say that what happened since Liberation Day is a shock akin to how markets thought of the weaponization of the US dollar in response to the Russian invasion of Ukraine. That kind of all-out attack in terms of the indiscriminate tariffs on allies as well as adversaries really shook up markets. And we have the short-term impact on the dollar, but really what I think is more important is that this is yet another step in the process of diminishing the role of the dollar as a global reserve currency.
Okay, fantastic. Eswar, do you agree with that?
In a world that was driven by logic, the US dollar should not be on the pedestal it is on right now. In particular, its volatile policy making in the US, the fraying of the institutional framework, the system of checks and balances, the independence of the central bank, the rule of law, all of these are fraying, so the dollar should be losing prominence. But the question in international finance always remains, if not the dollar, then what? Yes, the dollar has fallen by about 11 or 12% on a trade-weighted basis since the beginning of this year, but the dollar went up by about 10% from September of 2024 to the end of last year. So the dollar is pretty much where it was back in September 2024. So I think macro factors probably play a pretty big role in that, and one can tell a good macro story. But something is afoot, because certainly the world wants an alternative. As a payment currency and as a reserve currency, the US has certainly used the dollar's prominence in ways that US rivals and even US allies find very disconcerting. But the reality is that in international finance, you still need currencies that people can coordinate on and can trust. So what has happened is a little curious. If you look at the dollar's role as a payment currency, it's not fallen very much. In fact, many of the changes that we are seeing in the development of China's cross-border interbank payment system, other payment systems that can communicate more directly with each other, seem to be taking a bigger hit on currencies like the euro. If you look at the dollar share as a reserve currency, it has fallen in the last 3 or 4 years, but the euro share has fallen proportionately. So in fact, one might argue that the dollar's absolute dominance has eroded somewhat, but in relative dominance, very little has changed.
Thanks, Eswar. Very quickly, that macro story. So the dollar goes up at the end of last year and down this year. What would that macro story be?
Towards the end of last year, it looked like the US economy was in great shape. A soft landing was very much in prospect. The rest of the world looked like it was in a shambles. This year, the narrative has shifted. Every country is affected by the US tariffs, of course, but the US is affected the most of all because all of its trade is now exposed to tariffs. And if you look at the relative change in economic prospects of the latter half of this year, the US has taken a much bigger hit than the rest of the world.
Okay, thanks, Eswa. Kay, what do you make of the market's movements this year?
Well, first of all, a dominance of the currency is usually sustained for a long period of time. They usually change hands about a century or 2 centuries. So we might be in the later period of that century, we don't know, but it is a very, very long time if we look at back in history between the Dutch and the British and the US dollar, of course. Apart from the fact that the dollar is the US government's biggest spy network, the US deficits are obviously ballooning. The presumption that we are in a permanently low interest rate, low inflation cycle has proven to be at least somewhat wrong. The presumption is wrong. And there is a reigning dollar challenge, which is a dollar shortage around the world. The relative size of the US is declining, although not as fast as one might have expected, but it is declining, added to the fact that, as one was mentioning, the trust of the system, the rule of law, the institutions, of course, is also eroding. But also, I believe that every decade or so, the returns to the equity returns, or return to assets, is not only dominated by the U.S. assets, right? The highest return. It was emerging markets for a while, and they do switch. And it's true that the recent decades, the U.S. assets have performed very well. But is that really an assumption that we can carry forward for an indefinite period? Looking back at history, these things do change hand. So. And apart from the fact that you mentioned the euro, non-conventional currencies, RMB, Canadian dollar, Australian dollar, they have grown from 2% of global reserves to 11% in the last 20 years. So it's a sure and slow but sure decline of the dollar and the rise of the other.
Okay, well, we'll come to alternatives in a minute. I just wanted to follow up on, you described the dollar as the US's greatest spy. Just please elaborate on that briefly, because it's too fun to ignore.
Well, apparently, whenever you use dollars, the American government can, and Mr. Trump can find out. So that's
okay.
And of course, the sanctions and all. But
yeah, okay. Jeff, what do you make of what's happened this year?
Well, I think Eswar's distinction between the use of the dollar as a vehicle currency for trade and payments and its role as an asset or as a way of buying dollar-denominated assets is really important. And in the latter instance, I think we've been reminded that the use of the dollar and the use of dollar assets depends fundamentally, it's given us a lesson in a sense, or a reminder of the importance of confidence, of trust, of expectations about the future and the future course of both American fiscal policy and of American politics more generally. So I think that raises real questions about whether, in fact, the dollar, there is enough confidence in the U.S., in the American financial system and American fiscal policy to translate into continued confidence in the dollar as an asset and the dollar as a way of getting dollar-denominated assets. Of course, we confront the age-old story of not being able to beat something with nothing, and that leads us to the question of alternatives, and we'll get there, I'm sure.
Start of the year, I received quite a lot of economic research into my inbox saying that if Trump imposes tariffs, well, the dollar will appreciate to offset those tariffs. It in fact depreciated. Why is that?
Well, I think there are 2 factors here. The first is the direct effect of the tariffs themselves, or the expectation of the tariffs, which should lead other currencies to depreciate against the dollar, right? But then there's the confidence factor. I think my inclination, and I'd love to hear what others have to say about it, my inclination is the depreciation of the dollar largely reflected a real concern about confidence in the future course of American policy and of American politics.
So the confidence factor has outweighed the offsetting factor.
Offset, yes, right.
Yeah, okay, great, thank you. So let's move on to talk about, so it sounds like most of our panelists think that there are at least some reasons why investors should worry about the dollar and why people should seek alternatives. What alternatives are there? Which do you think are the more attractive? And what would it take for them to actually take a meaningful share of, whether it's payments or reserves, the role of the dollar? And let's go in the same order again. So, Diana, you get to go first.
Well, one of the critical reasons, key reasons why the dollar's global role is threatened is because China does not want to depend on the US dollar-based global financial system, neither in terms of its payment system nor in terms of capital markets. So what we are seeing, first of all, and actually as economists we are going to suffer because we can no longer measure the share of the yuan in global payments by using the SWIFT data, the messaging system that the correspondent banking system uses. For the reason that Keiyu mentioned, there is this concern that through SWIFT, America can monitor these transactions. So China created its own payment system, the CIPS, which has an inbuilt messaging system. Now, of course, in the transition period, they have been using SWIFT, but more and more of the transactions that happen in yuan will be outside of that measurement metric that we use, which is the SWIFT payments. I think also what's really important is to realize that when it comes to the dollar's role as a medium of exchange, a key factor here is the tech revolution in global payments. One of the reasons why dollars are held in terms of the medium of exchange role is the inefficiency of the global payment system, the fact that it takes days for the dollars to travel through the correspondent banking system, so banks and central banks need to hold it for a liquidity reason. And with the arrival of stable coins, but also much more importantly, central bank digital currencies, that will revolutionize global payments. And it will be near instantaneous at a fraction of the cost. So over time, that would really erode the need and threaten the use of the dollar as a medium of exchange. On the store of value, the big change has been, and I would say not just the short-term confidence factor, but really the economic mismanagement and more broadly mismanagement that was presented once Trump came to power, that has really shaken up as well the confidence and the idea of American exceptionalism. And so up until only a few years ago, China did not have its capital and financial markets open to the rest of the world. They have changed that, and they've realized that the past 40 years they spent industrializing, but now they are the factory of the world, they're high up the value-added chain. The next big transition is to reform and develop capital markets. And they have finally been opening up, broadening them, professionalizing them. And there is interest from the rest of the world in Chinese assets, and that will increase over time, and it may not be predicated on the same basis that we had the interest in the US.
Okay. So you gave some reasons, technological developments, reasons to think that there will be increasing threats to the dollar's role in the future. But what do you think the alternative will be? Will it be holding?
It will be the
Chinese?
yuan. It will be the yuan. I mean, the issue with the euro that was mentioned was that actually Russia was trying to diversify from dollars, and it was diversifying in euros because it didn't want to have to be so dependent on China. China would have ideally liked to conduct the trade in yuan, the oil trade with Russia. Of course, that was all the case before the invasion of Ukraine. The moment Ukraine, and if you remember, there was an oil deal struck between President Putin and President Xi when they had that friends meeting ahead of the invasion, and that deal was denominated and paid for in euros. That has changed dramatically because since the invasion of Ukraine, Russia is way more dependent on China, and of course a lot of then the transactions are happening in yuan.
Yeah.
So I think that's important to realize. Now, China is actively trying to create a separate financial sphere of influence with the yuan at its center.
Yes. Okay, thank you. Eswar, what do you see as the alternatives? Obviously, I can see some continuing problems to the use of yuan as an alternative, not least that there are capital controls.
Yes, again, Diana was very logical, but I want to make the point again that we are not necessarily in a world driven by logic. So if you think about the alternatives, the euro, when it was created in 1999, seemed like the logical alternative, and sure enough, in the first 7 years after its creation, it seemed to be on its way to challenging the dollar, and then it stalled. What Europe needs is true unification, economic, banking, and in a broader set of policies, and it hasn't quite got there, and it continues to be ripped apart by centrifugal forces. If you think about the RMB, certainly it seemed like a contender once the internationalization project started in 2010, and then in 2015 it stalled. And it's worth thinking about why it stalled, because China essentially went back to its playbook of managing the currency through the imposition of capital controls, both overt and subtle, and to this day that has left scars. So the problem is that while China has indeed opened up its markets nominally, both bond and equity markets to international investors, the question is whether there is enough trust that the government has moved to durably lifting the capital controls, or if these are again going to be somewhat cyclical. Now there is this issue about the institutional framework as well. One needs, in my argument, a good institutional framework which includes the checks and balances, the rule of law, and independent central bank. Why? Because these are crucial for the trust of domestic and foreign investors. I argued already that the US is losing the strength of its institutional framework. But what is very important in international finance is that you don't need to be the paragon of perfection. You just need to have a better combination than the rest. And that combination that the US brings to the table is still very difficult to challenge. I do hope that the renminbi will start playing a bigger role in international finance, but that will take some work. It will take a lot more work in terms of not only professing but also acting in a way that shows that the exchange rate is being allowed to be more market determined, and that capital controls are going to durably stay off the table, in addition to better financial regulatory frameworks and so on. So the question is whether the government is willing to show its commitment to these broader reforms.
Okay, do you see any signs of China's government doing that and taking the steps that are needed to internationalize the RMB?
First of all, we haven't mentioned one thing that really backs up the dollar's prominence, which is the desire to have safe assets, right? It's a big, there's a huge demand coming from the rest of the world. U.S. is the sole supplier of safe assets. I mean, Europe surely has the potential, if you look at Germany and France, but political reasons and lack of unified bond market, etc., makes it very difficult. It's interesting that there has been recently this additional demand for RMB government, Chinese government bonds. I think that China, along with Europe, has this potential. Again, it's a potential to challenge the being the supplier of safe assets, especially when many people are saying that the treasuries are no longer considered safe. Right. There are a lot of things that are happening that are changing about the U.S. bond market that we have to, investors are questioning that. The question is, are they going to really take the opportunity? I realize opportunity. Now, just one thing, I think that it's really what we talk about an alternative, right? But there are spurts of usage shocks that push the RMB, for instance, in a positive direction. Geopolitical shocks like the Russian-Ukraine war. Actually, every time China signs swap lines, bilateral swap lines with many different countries, 40 countries in total, it does. Research has shown that it does increase a bit the internationalization of the Chinese RMB. In terms of trade, if you look at trade invoicing, it went really from literally 0 to 30% denominated in RMB. Half of Chinese capital flows, outflows, and inflows are now denominated in RMB. The real issue is that China's bond market is not mature, financial system is not mature. There's nothing to hold, or there's not enough assets that back RMB-based assets for investors to want to hold it, rather than just exchange into other currency. I think that they have exhibited more exchange rate flexibility, obviously not going to the full throttle of no capital controls, but in terms of the basket moving from 16 currencies to 24 countries by 2017, and the fact that the RMB was allowed to actually appreciate against the dollar during COVID, whilst the Korean won and Japanese yen depreciated by 35%, have shown a bit more flexibility in the past. Of course, we have to see what the reaction would be after the response. So I think there are these small changes, but finally we do have to separate the reserve currency aspect and the payment system, right? Where there's a huge parallel movement in the payment system that I think could be quite prominent. SIPS, BRICS, and Bridge, and a bunch of others, even Europe, China, many countries signing bilaterally exchanging to avoid the SWIFT. I think that is a real thing, and the rise of digital currency, stable coins would simply accelerate that. So that is not necessarily in conflict with that trend. Yeah.
Okay. Fantastic, thank you. Jeff, I'd like to get your comments on alternatives, but also wonder about the politics of this. And in particular, the US has shown that it is willing to try and prevent the rise of the Chinese tech industry, and has also, Mr. Trump has said he's very keen to preserve the role of the dollar. So do you think that there are actions the US might take that would undermine efforts to develop alternatives to the dollar?
Well, I would like to emphasize what's been said, which is I think that when we think about currency dominance, we're not really talking about the use of the currency for transactional purposes. It's really as a reserve currency. That's what really matters. And there, I just would like to emphasize what others have said, and this is relevant to answering your question, which is there really is no real challenger to the United States, given the depth and the breadth and liquidity of the American financial markets. Now, we do have cracks in the architecture to some extent. The current chair of the Council of Economic Advisors in his job application back in November suggested that we could maintain both the reserve currency status of the dollar and depreciate it by expropriating holders of treasury securities and turning them all into century bonds. That should have caused a little bit of a ruction in interest in the US dollar, and I think there is still concern along those lines. I think that the initiatives that you've mentioned, to some extent, raise questions about what the U.S. government is willing and capable of doing to try to maintain both the reserve currency role of the dollar and to move it in a direction that it sees as valuable in its goal of trying to reindustrialize America, bring or reshore industry to the U.S. Now, I guess I want to say in that context that Europe as an alternative, given what's been happening on the American, I see the euro as a much more likely potential alternative than the RMB. I understand that Europe is not an integrated financial market. It's 27 fragmented financial markets. There are innumerable problems, but I think that to some extent the Europeans have been shocked into trying to address some of those. I spent much of May going back and forth to Europe, and in one of those trips, a German friend of mine who's pretty well connected said, it's always useful to have an external enemy, and now we have two. And that has shocked many in the European policymaking community to think about how we can move forward. We've seen the repeal of the debt brake in Germany, which has had an impact on the potential availability of a safe asset in Europe. I think the concern, the legitimate concern on the part of those in the rest of the world is that the Trump administration has a set of goals with respect to both American economic policy, specifically reindustrializing, reshoring, whatever you want to call it, and the role of the US dollar as a reserve currency, which are in some sense in contradiction to one another, as are aspects of the trade policy as well. And that, to my mind, raises real questions, as I think Eswar has been alluding to, about the consistency, the reliability, even the competence of American macroeconomic policy with respect both to the dollar and to the related industrial and trade policies.
But why the euro rather than the RMB?
I think that Europe is much closer, again, thinking about use as a reserve currency.
Yeah.
A currency that will be held by monetary authorities, by central banks, by the corporate sector, is much closer to being a legitimate source of assets that the private sector and the public sector will be willing to hold. I think that at this point, the thinking about where the Chinese financial market, financial system stands and where it might be in a few years, there will be, I think, movement towards being a legitimate source of a safe asset. But I think there is a long way to go before private investors and central banks will regard Chinese financial assets as safe as European financial assets. But there may be some disagreement.
Yeah, I was going to ask if anyone on the panel wants to take the other side.
Actually, I think it's worth making a distinction, not just between payment and reserve currencies, between reserve currencies and safe haven currencies. I can well imagine that there is increasing demand for the renminbi as a diversification opportunity, because if you think about central banks that are on the wrong side of the political divide with the US and the rest of the West, certainly China looks like an attractive option. But what a safe asset currency is, and before China came on the scene, there was no real distinction between the two. A safe haven currency is one that investors turn to in troubled times. And in that context, I think the issue of trust becomes even more important. So to Jeff's notion that the euro is a potentially stronger alternative to the dollar, I think it's because of the institutional framework. So the question is whether China is also willing to change the institutional framework in addition to the other things that we talked about, so that it could engender the trust of foreign investors, and I'm not sure it's going in that direction.
Glenn.
What I think is important is to realize, one measurement of the strength of a currency as sort of a global currency is whether other currencies are pegging their currency or managing their currency relative to it. And on that metric, what's interesting to observe in Asia is that the Asian countries have been now, for the past 15 years, really managing their currency. I know that it's also to the dollar, but with respect to the yuan. And I wouldn't underestimate even small changes or diminishing of the dollar as a global currency, because given the position of the US in terms of its budget deficit and its debt levels, it could have significant repercussions for the US economy. So you don't need to dethrone the dollar as a global reserve currency or as the most used reserve currency in order to create quite a complicated situation for the management of the US economy. I think another very important and interesting consideration is the role of the petrodollar system in all this. Because if you look, and it was really the linchpin of kind of sustaining the dollar since the Nixon shock. And 1/5, so the oil trade, the global oil trade, which is predominantly in dollars, is actually 1/5 of the overall global dollar trade. So a change in that system will have a disproportionate impact on the standing of the dollar. And what's interesting is that there is a deepening relationship between China and the Middle East. You wouldn't necessarily expect, let's say, those countries that are likely to fall in the US-led sphere of influence to consider Chinese assets as safe assets. But what about all those countries that are not going to be in the US sphere of influence? What metrics do they use when they consider whether they are going to hold Chinese assets? Now, in the case, for example, of the Saudis, I have come across words by the head of the PAF where he says that, they're actually feeling comfortable investing in China because they have special assurances when it comes to the capital controls. And when we come to the issue of the capital controls, it's another very interesting story. Because, as an economist, the most important thing, or one of the most important things, is to determine the direction of causation. Because if A leads to B produces C, in economics you can have turnaround, B leads to A produces D. And D and C can be diametrically opposite. So this digitalization of global payments, in fact, if you use central bank digital currencies for cross-border payments, you have full visibility of where the flows are moving. I would argue that over time, if that becomes the sort of standard for cross-border payments, China will be a lot more willing to allow much bigger capital flows because it will feel more in control. One of the biggest contradiction for the Chinese Communist Party in terms of the development of China has been the fact that they saw that introducing market forces did produce growth and prosperity, but then how do you keep control? And when you have more visibility to preempt problems, you feel more in control. So you're much more likely to relax than the other way around.
Okay. I want to make sure there's plenty of time for questions from the audience, particularly because I see lots of orange badges out there. But very briefly, I wanted to touch on stable coins, because this has come up a few times during my conversations here, and I think, Eswa, you were also saying that you've had that conversation. Do you see stable coins as a coming alternative reserve asset? Or?
No, as Diana said, international payments are extraordinarily inefficient right now, and stable coins are showing us that you can use technology to change things, and there are certainly wholesale central bank digital currency initiatives by many central banks that are going to create more efficient payment rails. Now, the interesting thing is that if you think about the stable coin world, you can issue stable coins and basically back with any currency. And there is one company, USD Circle, which is issuing, which is the second largest stable coin issuer in the world as of now, which has a USD coin, which is backed with US dollars, a Japanese yen coin, a euro coin. And what they're finding is that nobody wants the other stable coins. Everybody wants a dollar-backed stable coin. So in fact, the proliferation of stable coins might well end up indirectly increasing the dollar's prominence. Now, there has been talk in China about potentially issuing an RMB-denominated stable coin. Perhaps it's a defensive measure. And much of the discussion seems to be about issuing this in Hong Kong. But to my mind, this creates a real problem, because you have right now the onshore and offshore markets which are not unified. So if you issue a stable coin linked to the CNH and you don't have unification between the two markets, that's going to make exchange rate management much harder, and the existence of this effectively dual exchange rates, which could lead to much greater discrepancy between the two, would actually reduce the amount of traction that a renminbi-denominated stable coin might accomplish. So I think what China needs is not a stable coin right now. It needs a lot of these other changes that we've been talking about. That, I think, would get China much further in terms of internationalization of the renminbi. But I think the role of the dollar and other vehicle currencies is almost certainly going to decline. The question is whether there are going to be alternatives that can really rival the dollar, or whether the dollar, again, in a relative sense, will remain dominant, while other vehicle currencies take an even bigger hit.
Kay or Jeff, do you want to come in on that?
I just want to say that we cannot rule out that we're going towards a multiple currency equilibrium. And that's the trajectory. I think it will be very interesting to see what the Chinese government decides to do, because, given the U.S.-China competition background, the fact that the USD stablecoin will simply reinforce the dollar dominance, whilst the Chinese have been making huge endeavors to internationalize RMB, they will. I think it is a real possibility that they will do an RMB back to stablecoin. But to Eswar's point, there will be challenges. Although I think the dollar RMB exchange rate had been relatively stable in the last few years. I don't know if that's an assumption that can continue. But the fact that also this can also accelerate. Well, some in China believe that it can accelerate the usage of RMB because of the convenience, the real-time payments, and so on. But we have to see. Yeah.
Jeff?
Well, I would emphasize again that if there is a decline in the use of the dollar as a reserve currency, not vehicle, but as a reserve currency, it will almost certainly be because of the inconsistencies and questions about American economic policy. At this point, although it's hard to say exactly where we stand today, there is something of a contradiction between the administration's position on the domestic implications of the role of the dollar and its international implications. That hasn't been resolved. It may not be resolved. If those contradictions grow, then I think confidence in the dollar will decline. So I think the dominant role of the US dollar is America's to lose.
Okay. Questions? So I hope we've got a mic somewhere. I can see a hand going straight up in the back corner there, so please. And if you could introduce yourself as well when you...
Thank you. This is This is Katie, reporter from China Economic Net. I have two questions for Madam Diana. And the first question is, how do you define the de-dollarization? Is it refers to the lowering share of dollars in international trade, financial transactions, and the foreign reserves, or does it involve a deeper reform in international currency system? And the second question is that if the trend continues, how will it impact the global financial system and also the international organizations? Thank you.
Okay, Dana, you could go for a lot there, so brief definition and comment.
Briefly, I mean, we try to distinguish between the three roles of money. We didn't mention unit of account, which is quite important. But I would be measuring the role of the dollar on all three. You can't just sort of say, I have to say, just if it is share of reserves. It has to be across all three measures. So you look at those and then you'll determine the relative importance. And actually, what we've observed through history is that when one currency superseded another as the global reserve currency, the first impetus was always through the medium of exchange function. And then came the store of value, and actually probably last is the unit of account. And the unit of account, what's most important for that is really well-functioning markets. So I would expect that using the yuan as a unit of account will probably be the last thing that comes on board. The first will be payments, then store of value. What was your second question? Oh, the change in the global financial system. Look, are we going to be in a multipolar world, or are we going to be in a bipolar world with a US-led and a China-led sphere of influence? I would argue over the long term, unless there is some ecological disaster that wipes out half of the global population, that ultimately, because China and the US are so far ahead than anyone else in technological terms, that no one else is a contender to be a tech leader or a third pole. And because technology permeates absolutely everything in our daily lives, and it will do much more so, then you have to kind of pick and choose which side you want to join. It will be really hard for any other part of the world to be that kind of credible contender.
Okay, so you're a bipolar financial system potentially. I'm sure the other panelists would have things to say, but I'm going to come to the lady in the third row there, and then we'll come to the gentleman at the front.
Thank you. I'm from the South China Morning Post, so I have a question about the Hong Kong dollar peg system. Since we talk about the confidence over the US dollar, so is there a need for Hong Kong to change its dollar peg system anytime soon? Thank you.
I know Diana's got things to say about this.
Well, yes, I do. No, absolutely not, actually. It's neither in Beijing nor in Hong Kong's interest to do so. Because, in fact, China does realize now that it needs to use Hong Kong and its offshore system to help internationalize the currency. And actually that, if you talk to non-Chinese investors, they still prefer to buy Chinese assets in Hong Kong than they do in China, and there is a trust in the Hong Kong system. Now, of course, there have been fundamental changes in the last few years, but it seems that both Hong Kong and Beijing want to maintain essentially the sort of rule of law, common law system, transparency, etc., and do run Hong Kong in that way continuously going forward.
Okay. Anyone else got a view on the Hong Kong dollar?
Again, if you think about this from an economic point of view, the relationship between Hong Kong and the mainland is very strong. So if you were going to peg your currency to any other currency, logically, it would have to be the Chinese renminbi rather than the US dollar. But as Diana points out, the question is whether Hong Kong could remain as viable and vibrant a financial center if you didn't have it seen as a conduit with stable policies, and that stability still oddly seems to come from a link to the US dollar. It's certainly an issue that keeps coming up, and I think it will continue to come up, especially as integration between Hong Kong and the mainland proceeds.
Okay, I'm not seeing any strong desire to weigh in. Okay, the gentleman in the front row, And then we'll come to the lady over in the corner there.
Thank you. Jin Ma from IF. I want to ask panelists where you see dollar CNY exchange rate will be, say, in the next 24 months. Ideally, I want a point estimate will go to 7.5 or 6.8. If it cannot, at least can you give us a directional estimate? What it appreciate against the dollar or depreciate against the dollar by how much in the next 24 months? So I think that's an incredibly important issue.
Okay.
Thank you.
I'm going to enforce the rules of the question, so you either have to give a point estimate or you have to say up and down. You're not allowed to waffle. And Diana gets to go first again.
Oh, wow. So I get to answer all the questions. I mean...
No, you've got to...
Oh, just very quickly. I would say that it's likely to stay stable within 2 to 3% deviation on either side,
Okay.
and more likely to go up than down.
Okay, Eswa.
So I'm an academic economist. I don't make exchange rate or interest rate forecasts, but if you think about the exchange rate as a random walk, the best estimate is exactly where it is today.
Okay.
I agree, but if I were forced, I would say more likely to go down than go up.
Okay.
I would agree with Eswar as an academic. Hard pass.
I'm the only one who is prepared to put my head on that.
We'll check
Okay,
next year.
we'll come to the question over in the corner here.
Thank you. I'm with Taisi Media. I want to ask a question, follow-up question on stablecoin, because this morning I was at a session where IMF Vice President Li Bo is present. So he said, he mentioned a very important regarding to the regulatory aspect of the stablecoin. He mentioned that there is more effort to be done to form an international consensus, and in this process there are two key important questions. One is that do you see stablecoin as money or financial asset? And the second one is, if it's money, and is it M2 or M0? Because different definitions means different regulations. So I'd like to hear your opinions.
Okay,
regarding
so,
this.
so
Thank
the
you.
questions are, is it money or is it an asset?
Financial
And
asset.
is it M0 or is it M2?
Yeah.
Okay, good, clearly defined questions. We'll go this way this time, so Jeff goes first.
It doesn't matter what I think, which is that it's not money, but it does matter what the central banks think. And I think some of them are tending towards believing or wanting to believe that it can serve as money. I don't agree, but it doesn't matter what I think.
And I guess it follows that if that's your view, then it's neither M0 nor M2.
Right.
Okay.
I'm going to pass.
You're going to pass? Okay, Eswa.
Stable coins are wonderful things because they have really exposed the inefficiencies in the international payment system now and shown how you can use technology to get around that. But having said that, stable coins are essentially trying to do something which I think is not ideal. What the Genius Act in the US gives stable coin issuers is exactly what they want, which is legitimacy, which allows them to serve as a sort of conduit from traditional finance to decentralized finance, but with very minimal regulation. So I see a lot of trouble coming. And if you think about stable coins essentially as being alternatives for bank deposits, which are also payment mechanisms, the crucial issue is that stable coins don't pay any interest. It's hard to view them as securities. They maintain stable value relative to the underlying assets. So they are not going to be the equivalent of bank deposits, but they could undercut the role of bank deposits, which creates a whole set of issues about what the commercial banking structure is going to look like when you have third-party payment providers like stable coins.
Okay, so if I interpret that in terms of the question, you think it could be money, not an asset, but more M2 than M0.
One can think about it as a digitization of fiat money. So essentially it is backed up by treasury, so you're taking money and putting it in digital form.
Okay, I'm trying to force you to answer the question in a precise sense. Okay, we've got time for one more question. We're going to come to the gentleman here. This is the last question, I'm afraid.
Thank you. My question is, President Trump recently threatened the BRICS countries against adopting a common currency. Do you think there is a move within the BRICS nations for a common currency? And how worried is the United States government about such a currency, or is it just Trump being Trump? Thank you.
Eswa on that one.
Okay. I think the BRICS and practically every other country in the world would like to have a serious alternative to the dollar. But the question really is one of trust, which is crucial when you think about money in any form. And if you think about the BRICS, the question is whether they have trust in each other. The question is, if you have a BRICS currency, who manages what is the governance structure? And certainly India would like to have an alternative, but does it really want an alternative that might have a governance structure that is dominated by China? Probably not. So I think it's certainly Trump being Trump. His policy is a bundle of contradictions, as Professor Frieden has already pointed out. What he's doing is essentially hurting the dollar's role in the long run while he wants it to remain the strongest currency. But I don't think the BRICS currency is really a reality, although it is certainly a fervent desire of the entire group.
Okay, I'm afraid we have to leave it there because the World Economic Forum runs on time. And thank you very much for your attention and your fantastic questions. And please join me in giving a round of applause for our panel.